All right, folks, here we are on Trading Nut YouTube channel. We've got Paul Scott here in the house with us. We've just done a fantastic podcast. Go and check it out. Link underneath the video here after you've watched this, where Paul, I suppose there's a treat at the end of it. So I'm going to tell you guys what I've seen. Paul's going to give you a bit of a teaser as to what he knows in the markets around what the institutions are doing, where they're trading, and how predictable it is. So, Paul, welcome to the YouTube channel.
Thanks, buddy. Right, yeah. I mean, look, we've a little bit of a segment here of what I would be taking people through. Yeah, real interesting because I don't think a lot of people know about what came before the euro.
Hey folks, my sponsors City Traders Imperium have just launched some amazing changes to their funded trader program you got to check out. You can now skip the whole evaluation, trade gold as well as Forex, plus they've increased the drawdown you're allowed in both the evaluation and when funded. With C2A, it's even faster and easier to reach up to $4 million in funding with a 50 to 70% profit share. Click the link in the description to find out what else has changed.
So let's start off here. So this is, Wikipedia. This is freely available to absolutely everybody on the planet. But it's knowing your history. Basically, history is essentially always doomed to repeat itself. But it obviously has to have a start. It has to have a beginning. So where does the euro get its trading levels from? It comes from things that came in the past before it. This thing here was the predecessor of the euro. It's called the European Currency Unit. It says on here not to be confused with the euro. Yeah, sorry, I'm going to very much confuse it with the euro. Let's just have a very quick read of what this is. So the European Currency Unit was a unit of account. Now, a unit of account has different connotations. The one that we're going to be looking at it with is essentially to pay for goods and services. And this was used by what was then known as the European Economic Community, the EEC, these days known as the European Union. One thing that we know about this is that they love to change the names of things, but nothing ever really changes. What I want you to note is when it came into being, 13th of March of 1979, it itself replaces the European Unit of Account at parity at March 13th of 1979. It was later goes on to be replaced by the euro at parity on the 1st of January 1999. So as me and Cam were, going through this, we both agreed, and I'm sure that you would do as well, that if you're looking at your euro chart should start from the 1st of January of 1999. If you have anything else on it, it can't be the euro. It's got to be this and or its predecessor. So the European Currency Unit was not a circulating currency. It's a purely institutional, but purely also electronic. It's an electronic form of payment. But when you have markets, you have speculation, and this is where this is kind of originates from. For those of you that are old enough to remember, we have some of the old European currencies here: Belgian franc, Deutsche marks, German mark, French franc, Irish punt, Italian lira, Dutch guilders, etc., etc., morphs into becoming the euro. If we look here, these percentages here, this is what's known as a weighted average. So a weighted average, you've had all of those percentages up. It adds up to 100%, of course. But then if we looked at it in pure percentage terms, which country essentially has the biggest slice of the pie, the biggest control, so to speak? German mark. If you were to ask yourself today, okay, so which country has perhaps the biggest control or biggest slice of the pie of the euro to derive its valuation, again, you're going to say Germany is the biggest economy in Europe. So that's what came before the euro. Now, if your chart doesn't show you anything before the 1st of January 1999, you can go to your broker. You can, in actual fact, add history to your chart. So how would you do that? The first thing you've got to do is you've got to make sure that you have the EURUSD extension, right? None of this, dot something else. It won't download the history. This is the code for the euro. First thing that you do is Tools, History Center. This is for MT4, by the way. If you have MT5, this just load this up automatically for you. But then go and find FX, go and find EURUSD, double click on the monthly, click the download button, and what that will do is that will then pull the data off the server, and now it will add it to your history. So if we were to go to the 1st of Jan of 1999, which is here, anything forward of this line, that's the euro. What else have we discovered? Well, this can't be the euro, because this is before Jan 1st of 1999. So this is the European currency unit. And so then this, we can scroll all the way back, and we said, okay, so March of 1979, this is when this swaps from being the European unit of account to the European currency unit. We'll just put it in as April. Obviously, you can't slice the month in half. So this is the European unit of account. This is the European currency unit. And this is the euro. So as I just went through with Cam on the chart, if we were to call this an algebraic equation, the answer is C. How did we get there? And we got there by levels created on A plus levels created on B, being the European currency unit, are then simply copied and pasted over onto the euro. They are still being used today. Some of them were created, as you can probably see, all the way back in the early 1970s. They are still very important. They are still being used today. So if you're looking at your chart and you're looking at, on a 5-minute chart, 15-minute chart, an hourly chart, you're never going to spot this. You're not supposed to. You're supposed to be being distracted away with chart patterns and trend lines and everything else in the weird and wonderful world of retail trading. And what you should be purely focusing on, levels here were derived from the past, have been very, very important in the life of the euro, and will continue to be very, very important in the life of the euro. How I marked it up with Cam, basically, he has the levels on his charts. He's now in the position where the right-hand side of his chart is not blank. He now knows where he wants to trade from before the market gets there, which of course is what everybody wants to know.
So it's just to give you guys some perspective from my point of view. So yeah, Paul's kindly gone through, and obviously these are the sort of levels that he's learned over the years and understands over the years. But what he was able to do was literally go through the chart and mark up these levels, and only by looking at this chart. And then, so for example, I'm just going to draw a random line on here, and then go back in time, and you could see even in these periods of time, and it actually wasn't that high, but you could even see down here that there were reactions going on, like almost to the pip for those levels. And you could see that clearly, even at the current price, which was somewhere down here, when you jumped onto lower time frames. So for example, if you went to a weekly time frame or a daily time frame, and look, I'm not saying that's a level, but that's obviously where it's bounced from. You could see these reactions to the pip as well. So
let's let people have a freebie. That is one of the levels.
Oh, that's one. Okay, yeah. So that is one of the levels, which I suppose makes sense in terms of like looking at the reaction. I do vaguely remember you showing me this now as well. So yeah, that is at least one of the levels there, guys, that Paul's confirmed. But it's really interesting how he broke down the chart, and you could see just literally throughout the whole thing, these levels being bounced off 1, 2, it was so it's there, and I suppose as you put it, like not random.
Yeah, it's not random. The thing is it's putting structure on a chart. It's fleshing it out. And so, as I said to Cam as well, and I think we mentioned in the interview that the markets, they don't trend, they range. And what we've discovered is, and sat down with Cam and done it, is that this is where these ranges are. This is where you want to be trading from. Because why? Well, because this is where the big order flow sits. So they have a vested interest in making it move from this particular level to another particular level, which we haven't got around to discussing yet, but I'm sure we might do that in the future. But there's a massive difference between supply, demand, and support and resistance, because they ain't the same thing. You can represent them with a horizontal line. Yeah, that's the only way to represent them.
Hey guys, ever wonder what broker I use? Well, I use these guys, Hanko Trade. Look, it was a no-brainer for me because I was looking for a broker with really good trading conditions and one without any leverage restrictions. Look, also, by joining Hanko Trade, I was able to cut my cost of trading significantly with their super low commission of $1 per 100K. Look, if you want to find out more, check out hankotrade.com or there is a link in the description. Cool. Well, look, guys, this has been sort of hopefully insightful for you guys. It was massively insightful for me in terms of what Paul shared, and gives you a bit more of an understanding of what the banks are doing. Now, if you want to piece the whole thing together, then I do recommend checking out the interview that we just did as well, because Paul goes into a lot more detail around what the institutions are doing, how they're potentially like trading, which you can then see on a price chart like we've just seen now. So, Paul, before we wrap up, what's the best way for the guys to get hold of you?
Website, paulscottfx.com. I'm on LinkedIn as well, Paul Scott FX. I am on Twitter, although, to be honest, I don't really use it. That's at pscottfx. Yeah, don't go on there to get any content because
it'll be
not a lot on there.
It'll be sparse.
Yeah.
Okay. All right, guys. Well, look, Paul, thank you once again for coming on the show. Guys, do remember, hit subscribe, hit like, click on that notifications bell, and click all if you want to get future episodes like this. Also, if you do want to automate anything in your trading, then do go check out my Robot Builders Club, where I teach you how to build trading robots without doing any coding at all. Guys, thanks for watching, and we'll see you in the next one.